Interesting. Inflation is up. Jobs are doing great. Trump banging on about you need to cut the interest rates. You need to cut the interest rates. 93% chance that the Fed rate is going to be staying as it is. What's going on? It's not making sense. Is this just a quick move up because investors are like, all right, let's just make the illusion that the market's going to be okay with everything? It's completely thrown me off. Is it seasonal? Why is the jobs data coming looking so great? We haven't had any strikes. Okay, that makes sense. So we've got a lot of people like in work. Corporate America's doing great with its earnings. Maybe the good reading is because investors are like, okay, if there's more jobs being available, that means corporate America's going to have a good few quarters. Japan condemning the idea of Trump's tariffs, saying it's not permissible, it's not fair, not liking it. I'm telling you, he's talked about Forex manipulation. I don't even think they care about trade. I can imagine he's turned around and said to them all, stop manipulating the Forex markets. This is the tariff we're going to give you. Revalue your yen, and then we can start talking. Japan said, nope, not interested. China's chucked another 34% on top of tariffs as well. So, like, China's like, we don't care what you're doing. It is very, very tricky across this little marketplace that we've got right now. Macros aren't making sense. All week, the data's been suggesting that the labor market ain't doing too good. Today's live, we're just going to put it into perspective and understand exactly what's going on. But Bitcoin is up 0.7%. So who cares about the stock market, man? We don't need to worry about that. Let's break it all down, ladies and gentlemen. Welcome to Friday. I know the madness. It may be a fake pump. Maybe. Are they selling the rally? That could be something that we got to take into consideration. So I'm going to get this chart up to put it into perspective for you so we can understand exactly what the story is. Here we go. So in front of you, smart money, dumb money coming into play right now. So we've got the logic that the blue line says that when it's going up, smart money is buying because prices are dropping. And then when it's coming down, it means smart money is selling. So prices are rising. Okay, so what's the deal right now? Retail's getting a little bit optimistic about things. The stock market's just going crazy. I mean, look at that. NASDAQ says we don't give a damn. Is it just a run for liquidity? Are they just going to try and sweep the highs and then try and make a reversal? The news does not make sense. Look, let's just break it down for you. From a macro perspective, 177,000 is what they were. Well, is the reading that's come in. 138,000 was the projection. Hold on. There was barely any jobs available this week from the JOLTS job openings. Consumer confidence is dead. ADP comes in lower. Advanced GDP contracts. But don't worry, we've got a strong labor market. Who the f is actually employing these people? These numbers must be fudged. It does not make sense. But the stock market doesn't care. And that's what you've got to take into consideration. Now, is this consistent with bullish behavior? Remember, they sell as prices rise, they buy as prices drop. Do you actually think New York's going to wake up and be like, oh, wow, the NASDAQ's already moved up? How many percent is it? 1.19%. Everything looks like it's getting expensive for the day. Let's buy. I mean, maybe. Interest rate expectations coming into play right now, 93.2%. So they know we're not going to get any rate cuts, especially with this strong labor market. If the labor market is strong, it means that corporate America is employing people. It's got jobs available, but the jobs availability is saying that that's not the case. Unemployment claims came in higher, but there's more jobs available in non-farm. Can you make sense of it, ladies and gentlemen? Just quickly going over to the yields itself and have a look at what's going over there. The 5-year yield is up The 5-year yield is up 2.26%. The 10-year yield is up 1.6%. The stock market is up 1.19%. This stinks. So what this is saying is companies are okay with high interest rates. Do we understand that? It's saying to us that the stock market is not subject to the yields. That doesn't make sense. That's like saying that anyone in tech is going to go and borrow money, but they're not going to pay any interest on that. They're not going to pay any interest on that money borrowed because it just doesn't work for them. It's not mattering. that company is not subject to interest rate changes. It doesn't make sense. Is this a false move? Looking over to Bitcoin, Bitcoin's starting to pull back. Maybe Bitcoin's telling us the truth about things. But it just doesn't sit right. Look at the euro. The euro's up just 0.3%, not really doing anything. I just can't believe what's going on. Honestly, the market is real. I mean, the bond market is going down on the Treasury futures. Okay. So 10-year itself, let's quickly go over to it. 10-year is down 0.57%, but the yields, it's just not making sense. Are you guys making sense of this? Yeah, the move is very fast, but again, like, look at that. It's just singing. It's just I'm trying to look for, I'm looking at the order flow and it's just not even making sense over there either. Tariffs are going to be a problem. Amazon has missed. Apple's not really doing too good because of the China sales. Buy. Let's have a look at the volatility index. It appears that investors like it. It appears that the stock market doesn't care, but more importantly, it's looking like investors, if we're going to look at it from a smart money perspective, they are selling aggressively, which means that the VIX could effectively reverse and everything comes back down again. But when you marry up the macros, it's not making sense. That's why investors and institutional investors are starting to really like, where are we going to put our money, man? Nothing is making sense. And when you've got this nonsensical data right here, then makes you say to yourself, okay, then labor market showing 4.2% on the unemployment rate. So there's nothing to be worried about. Low employment is low, unemployment rate is low. So that's fine. You've got more jobs available in the non-farm. Again, these two readings right here, they give you the impression that everything's not looking good. But then the main reading at 1.77, look at NASDAQ. Oh my days. Wait. NASDAQ's not stopping. Look at that. Look at that. They've swept the previous day's high. Maybe this could be a clue that we could be rolling over, but it just looks like the market doesn't care. Bitcoin coming back down again. Bitcoin should be going down. Bitcoin should not be going down. This is not. Do you know what, guys? You could be witnessing probably a stop run, okay? And then the expectation is that it rolls because there's no real reason for news to suggest that the market should be going up. Amazon's not done good. Apple's not doing great with its sales. So investors are like, okay, a company not doing well, let's just buy the stock. Even if you speculate on that logic, it just doesn't make sense, ladies and gentlemen. It does not make sense. None of it is making sense. It moves with no logic. There is no logic. Unless the logic holds that they're just coming back into the vector candle recovery, then we can just screw off all the macros and just trade vector to vector, because this move does not make sense. But the market's not fully open just yet. I mean, it's just wild. Looking at it, it's who's buying? Who on earth is buying? Well, this looks like one of those false moves up, trap, sell into retail, because the idea is when investors wake up and they see that the NASDAQ is up nearly 1.19%, especially when Amazon and Apple haven't done too well. I mean, let's just go and have a look at their stock for a second. Let's look at NVIDIA. NVIDIA's not really, it's sort of a little gap up. Tesla, it's okay. Amazon, it's gapping up at the open. And of course, Apple has gapped down at the open, is gapping down at the open. So I'd really, really want to know how this is all going to play out. Dollar dominance is taking a bit of a tumble, 0.37% down. And then oil is just, God, Jesus Christ, they're going to end up giving it away soon. Okay, so it's just, the logic's not making sense, ladies and gentlemen. It's completely smacked me. It doesn't make sense. When was there logic? Well, there was logic back in the day, but now there isn't. Tina, does not make sense to connect all the vectors of candle along a yellow brick road. Okay, maybe. Tina, inflation up, wages up, unemployment up, gap down, GDP down, interest rate up. Doesn't seem like a good formula. Well, it clearly is. This is what's going on right now. The market is, everyone's like, it's one of those, it's like the GameStop. Okay, do you remember the GameStop run? Like when that was going up, everyone was like, forget it, I might as well get in as well. And that was going up. And then all these institutional investors started to jump in and start just buying it and buying it. And then there was that parabolic move by GameStop. This does not make sense. And honestly, I'm literally just watching it. Okay. I don't trade non-farm payrolls, but there was nothing making sense to the idea that it was going to go up, which has me even more thinking it's a very sinister move. A very sinister move. I'm looking at the order flow and I'm seeing 1s and 2s and 5s and 6s on the contractual sizes. And it's just not making sense, ladies and gentlemen. It really isn't. This thing does not make sense. Any question? Why would I even ask you guys a question? Like, you're asking me the question as well. How is it making sense? Because it's not. It really isn't. What do you not get? Once trade deals are done, it's happy days. That's what the market's pricing in. It's not that we're not. No, listen. You can see that the trade deals are clearly not being favored, okay? China's just chucked another 34% tariff on top of things, okay? Japan's not happy with the automotive decision that Trump's coming out with in regards to the tariffs. So whether the tariffs are being priced in or not, the logic's not there. All week, the data's been saying that the employment market is bad, okay? So let's cut the rates. Let's cut the rates. The Fed does not need to cut the rates. It doesn't. And that's why Trump keeps on banging on about it. Your $9 trillion worth of debt getting refinanced is getting refinanced at a much higher rate right now. Look at your 10-year, 4.29%. When this goes up, the stock market goes down, but it's broken. And you can see that that's the case, unless it's a stop run. And they're just running for the stops. And then at some point, we're going to end up seeing it reverse. Because if this continues to go up on the back of the yields going up, okay, they're not going into the bonds because it means that they favor what? What do they favor if they're not going into the bonds? They favor high risk, okay? But the bonds are going down and the expectation of interest rates staying higher would naturally make you think investors are going to convert into dollars. No, they're not, because they're selling dollars. Dollar is down 0.37%, okay? Are we going, let's have a look at the Aussie yen. Aussie yen is topping out at the highs, 0.45%. But the NASDAQ's doubled up its position in the 1.35 gain. Where is it? 1.35% gain? There it is, yeah. So 1.27% gain. Look at gold. What's gold doing? Gold's doing okay. It's up 0.24%. The logic's not there. It's not there. Tino is a perma bear. My algorithm doesn't want me to make money. Tino's a perma bear, bro. What is this clown talking about? Anyways. Anything else? Tariffs are not priced in. It clearly isn't. What do we have on NASDAQ? Looking at the market surge website, above 50 EMA or not? Bear with me a second. Let's have a look. Looking at the market surge. Actually, wait. So yesterday, stocks up. Yeah, so, okay, we've seen a good amount of stocks breaking out. But let's just have a look at where the NASDAQ is in terms of volume right now, because then that will put things into perspective. Okay. So this was yesterday's close, okay? So it closed very low to its downside, and volume was barely just above average, okay? So the next candle that comes into play is going to print a different story. It's obviously going to be high, but we want to verify if the volume is there, okay? This is wild, absolutely wild. Have I seen such a confusing market like this before? Frankly, no. All of the metrics that we've used, or that I've used in the past. So let's just jump back to 2007. No, let's jump back to a time when the interest rates were zero, okay? When they were really, really low. When the interest rates are really low, you don't need to be worrying about anything because the cost of money is cheap. So you can be buying everything, and any retraces that come into action, it's just going to end up sending assets to the upside and what have you. But when there was a time in the market when the volatility index wasn't even working, so they were like, oh, okay, this is not really giving us the impression about what's really going off, you know? And they were like, is the volatility index broken? Go and Google the articles. They were talking about the volatility index is not reading, it's not giving out or representation of what exactly is going on. Even when we should have gone into a recession, they changed the criteria of it, and we're no longer going into ever a recession. How can we have tariffs? How can we have all this madness of high interest rates, yet we don't even have the idea of a recession? Your dollar purchasing power is zero, so it doesn't make sense as to what's going on. The market hasn't contracted. And why would you not welcome the idea of a contraction in the marketplace unless you want to buy Bitcoin at 100K? And then you'll be that dude that says, I bought Bitcoin at 100K, and it just drops from there down to 70K again. Where do you want to be buying? None of you will walk into a car dealership and demand to pay the most expensive price. You wouldn't. You will never do that. So how does that make sense? It only implies that there's a stop run and it could actually retrace. If it retraces, it doesn't retrace much, and then it continues higher, then it's evident that the idea is that they're setting everything up for another corrective move. Because look, let's just be honest now. The NASDAQ, given that it's just such a fast move back up, okay? If it can this high at 20,551, then that is going to just be it's going to be an eye-opener for a lot of people. They would be convinced that the bull run is back on. They really would. Because it would say that they've broken this previous structure here, the last era of what was resistance. And institutional traders and, of course, retail investors will look at that and be like, oh my God, it's breaking higher. That would then lead to a flush of liquidity to come in. But the Fed's not releasing liquidity, is it? It's not making sense. Your request for recession has been denied. Tino, can we sustain high payrolls in these conditions? If there's companies that are, well, look at it like this. The actual average hourly earnings have come in lower. So the only logical thing is this. It's actually costing companies less money to keep people employed. Okay? But if there's less people going into work, and given that more people are claiming benefit, then that could also imply that people are like, you know what, there's no point in me going out to work. I may as well just claim benefit. All right, I'm not getting that much, but to go and put all that effort into working and then getting taxed on top of that, and inflation and high interest rates, just not making sense for me. Okay? So when you've got, and look, the CPI, Eurozone's inflation rate has gone up. And they've been cutting their interest rates so aggressively. It just blows my brain. It really does. Yeah, the Fed's not releasing liquidity, but the ECB and China are. And that's just to stick it to the Federal Reserve, to the US. Tina, you're bearish at 76K now, bearish at 97. You know what? If you're still using the words bearish, then you're not getting the bigger picture. Okay? You're not. Because this move here is bearish. Why is this move bearish? Well, let me just break the fundamentals of it. Okay? When someone, see, look what happened here. Last night, someone had placed a bid. So the definition of a bid is to buy. Okay, so they're buying at 96,300 when price was going down, right? So when it goes down, they buy it. And someone bought 30 million for 30.2 million Bitcoin buy order for 96,300. So when prices drop, it means that they're buying, right? And we know that's the case. I mean, if you look back, you've got people buying down here. Someone bought $15 million worth of Bitcoin at 94,100. So unless the mechanics of bidding and offers have changed, that would mean that someone up here has sold $38 million worth of Bitcoin. So when prices rise, usually when an investment increases in value, people tend to sell it. Or maybe when, I don't know, maybe when prices increase in value, people buy. What's the point of, I don't know. So, I mean, if you want me to just sell you a story and be like, yep, ladies and gentlemen, it's bullish, it's bullish. When someone sells Bitcoin at 38 million, that is a bullish sign. Yep, sell your Bitcoin as it's rising. That's a bullish sign. No, it's not a bullish sign. That's a bearish sign. You want them buying as it's dropping, because then that at one point there's going to be an instance where enough buyers come in and agree with price, and then they will offer. If I'm taking liquidity from you and you're a seller, because you're bearish, right? You give me your liquidity. Who are you selling to? You're selling to me, because I'm the guy that's going to buy when it drops. I ain't going to be the guy that buys when it rises. That's stupid. So then I take that and then I then say to myself, right, I've got a stack of Bitcoin right now. Okay, so what's going on? Any news announcements coming into play? Let me put a limit order over here just in case there's a spike in the marketplace. And then all of a sudden, assets start to appreciate, and then my order's getting closer and closer. Happy days. Someone has sold. Well, who's that someone? Me, because I sold it to you because you are buying when prices rise. That's the misconception in the marketplace. You don't buy when prices rise. The people that are buying as it's rising are late to the party. That's the catch. So when someone says to me, I'm bearish, I'm not. I'm bearish because prices are rising. People are selling. And once there's enough people that have sold, if there's no one else selling, the opposing thing happens. Everything comes down. So when prices are dropping, I'm bullish. Are we all on the same page with that? Yes, Cornelius, this is true. Sell, buy doesn't mean nothing. It's all transactions. It is all transactions. But why does someone buying $30 or $22 million worth of Bitcoin have no precedence to someone buying 7 million? It clearly does. So it's more important about someone buying. You can't just say it's just transactions. Yeah, physically it is a transaction. Okay. But then there comes an instance when there's too many people transacting on one basis and there's not enough people transacting in the opposing side. That's why prices drop and prices rise, because there's not there's an uneven balance. If there is a continuous balance, then everything keeps on going up and up and up because there's people transacting to buy and sell. But then when you have lower concentrations of sellers and you've got high concentration of buyers, that's where the term trapped buyers come into play. Exhaustion, absorption, that's when all these order flow concepts start to come into play. Does that make sense, ladies and gentlemen? Fake buying. It could be fake buying. I mean, Bitcoin is still holding out at the highs. I'd love to just see Bitcoin continuously move up. But like I said before, Bitcoin could be the true representation of where investors' heads are at, because after such a big move up to the upside with NASDAQ, Bitcoin hasn't done anything. You know? Yeah, the CME swap rate has changed. It's gone up 15%, not 15.93% on the yen and 6.33% on the euro. Okay. Tina, am I mistaken? It seems that the Coinank, no one wants to buy compared to those who want to sell. It seems buyers are not there except sporadically. So the best way for you to use this chart right here, okay? Look at this consolidation. That consolidation there shows you that there are buyers when prices are dropping because they're bearish. Do you see what I mean? Do you see why that concept is absolutely flawed? It's bearish, ladies and gentlemen. It's going down. It's not bearish. Because I can't transact if no one's going to buy from me. If no one's going to sell to me, I can't do anything, can I? You know? But do you think a buy order is matched with a buy order? No, it doesn't work like that, man. It's my buy is your sell. Your sell is my buy. Where'd you get your profit from, man? You get profit from my drawdown. I get profit from your drawdown. We get it from Mr. Market Maker because he supplies the liquidity. Because not everyone is going to have an even amount of liquidity to match someone's orders. There will never be one single person that can match an order from a retail perspective. If I decide to go and buy $10,000 worth of a position, and I come to you and be like, yo, I want to buy $10,000 worth of position, you'll be like, no, I don't want to fill that order. I'm more interested in a 100-gram position. I'm like, oh, God, what am I going to do now? Oh, my order's not taken. I say, oh, you know what? The exchange is no good for me. I'm just going to walk away from that exchange. Come along, Mr. Market Maker. And then he said, hold on a second. You want an order for $10,000. Okay, cool. And you want an order for $100,000. No problem. I'll supply you the liquidity. I'll make a little bit of a fee. And let's see what happens there. As long as you two are transacting in this exchange, I'm very satisfied because I can make money on that transaction. So that's what happens. Like for every buy, there's a sell, and every sell, there's a buy. As long as you understand that, when you start to see prices increasing in value, it's because people have an expectation that, yeah, it's rising, and I don't want to miss out. But the faster it moves up, the sooner people are selling, the less amount of people are going to be present to sell to. And when there's less people to sell to, you have an exhaustion of buyers at the top side of the move. Why is it every single move to the upside finalizes with a big green vector candle or a blue vector candle? Because it's the climatic move. Go look at it from the chart perspective. Look, for every move to the upside, green vector, and this is on the 4 hour, green vector candle rolls over, green vector candle rolls over, okay? Now, this right here was just volatility on hype, on news announcements, whatever it was, on the tariffs and everything, but they continued the rally up, and then they pulled it back ever so slightly, okay? But you go back and look at every single green vector candle that you see at the highs of a move, it's leading to a move lower. Stopping volume, off it goes. But when you see the green vectors at the lows after a move to the downside, then that's when you really want to start paying attention, because that's the true proof that someone's there buying. Okay? Look at that. Blue vector candle at the lows. Yeah? Green vector candle at the highs. Roll. Green vector candle at the highs. Roll. Blue vector candle, stopping volume candle, blue vector, roll. Green vector at the highs, roll. Blue vector, back down a little bit, okay? Green vector candle at the highs, roll. So that's the advert. Come and buy because people are bullish. Buy because people are bullish. They're not. They're bearish because it's marked up, because people have sold. What's NASDAQ doing? What's NASDAQ doing? Whoa, 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 whoa. Oh, what are you doing now? The logic says that this should come down. If the macros do hold true, this should come down. The market's opened. Now we know everybody's response. If it shoots back up, we've got another rally to the upside. But if the truth of the macros come into play, this should come down. And that's the logic. Gold is going up. David E. You are so wrong about what you say every time you are bearish. Since 16,500, you have no clue. Brother, we're at 96,000. Why are you talking about 16,500? Doesn't make sense, bro. Watch last night's live, because I gave that guy the math lesson, by the way. He contacted me and he said to me, Tino, I really need to understand the key differences between 96,000 and 8,000. So I just gave him, he got a calculator out, helped him out. And, you know, it was a really productive session. So for you, it looks like it's 16,500. So hit me up, bro, and I'll help you out with the math behind 96 and 16,500. And then we might get somewhere, my friend. So just let me know, bro. I'll gladly help you understand the difference between the two. It's not hard, but it might take a little bit of time. Maybe. Clearly does still, but never mind. Listen, it's all a bit of fun. Tino, since Bitcoin has not moved in NASDAQ, could that mean New York will be the mover for Bitcoin? Look. The market right now is just absorbing all the information. Statistically, well, from a macroeconomic perspective, my guy, 16,500, I'm playing with you, man. No hard feelings, bro. Statistically, the logic's not making sense of the move. It's not, okay? It's moved up way too fast. Non-farm payrolls is not what investors want to see. They don't want to see a strong labor market because they don't want to pay, unless investors want a stronger interest rates. Your president doesn't want strong interest rate, high interest rates, but the market does. So who's going to win? You'd think it's going to be the market. Yeah, the market wins all the time. Well, it clearly does. And that's what this is showing. It's showing that the market wants high interest rates for longer. Maybe to increase the purchasing power of the dollar, maybe to get investors back into the dollar. But it's still expensive to do business. So instead, I'll go over to euro and yen where it's cheaper. I convert my dollars now into euro and I'm getting 6.33%. I'm getting better than the US bond That is a joke. That is flawed. Doesn't make sense. But what we'll do, we'll just go over to the stock market instead and buy things on the cheap, assuming that it is on the cheap. A bit worrying how many don't seem to understand basic market movements. It doesn't matter. Doesn't matter. It's if you don't understand the logic of why prices go up or down, when prices are rising and you say it's bullish, okay, that's fine. But bullish from what perspective? Is it bullish from a move to the upside? Would you be more conscious about going short down here, or would you be conscious of going short up here? Which one would you favor going short from? Because you've got to look at the behavior. Lots of people have been buying. That means there's been a high concentration of people selling, because you can't buy without selling, right? So if the idea is that you would be happy to go long from here, test it. Test the logic that it's bullish. And if it works in your favor and it continues, happy days. At the end of it, it's not about who's right or wrong. You've made some money, okay? But when you go back in time and you look at every time the market moves aggressively to the upside, it usually ends up leading to a move down, because the logic is lots of people have sold the highs. That's when they say sell the rallies. And this is the logic of selling the rally, okay? So let's just see how the market performs, okay? Yeah, listen, I'm a short-term day trader, okay? I scalp frantically. That's my personality. That's what I do, all right? Now, when you say, Tino, what's your price projection of Bitcoin in the next 2 years? Man, come on. What are you asking me? And then you've got people that don't understand basic math, and they're like, so yeah, Bitcoin, when 8K, Tino? We're at 96 now, my bro. So, you know, you're trying to be funny, but what's funny is you can't see the difference between 8 and 96. We're nowhere near it, you know? We're nowhere near 1 million on Bitcoin. We're nowhere near 13 million, which is what Michael Saylor wants. Because everyone is, how can I put it to you? Everyone likes a good story, you know? I never promised you a bed of roses. This game's fucked up. Simple as. All right? Just understand. If they've been buying the lows, they're selling the highs. If that logic holds true and the market's not broken, NASDAQ should go down. Especially with all the information that's come out, you know? But anyways, I don't know. Interesting. Well, anyways, ladies and gentlemen, I hope that makes sense to you. It is Friday. Go and enjoy yourselves. If you want more information on the hybrid system, go to the Traders Reality website. NASDAQ, what are you doing? NASDAQ. Come on. I thought you were buying. NASDAQ. 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 What are you doing? We're in a bull market. What's going on? You got to buy when it's rising. No, buy. I thought we were buying. I thought we were bullish. Now you get the idea of why it's so frustrating when someone says to me, Tino's a perma bear. I'm perma bear when prices rise because I know people are being sold to. There's your example right there that the market screws everyone in the end. All right? Have a good weekend, guys, and I'll tune into you all next week. Peace. If you need math lessons, just comment in on the video. Yeah. If you need math lessons.